Hey everyone, welcome back to another week of trading. This is going to be a weekly market outlook for the 22nd of January to the 26th of January 2024. Let's get started with a quick recap on last week. I think the overall number was pretty much from the UK side of things. So we have the UK claiming count change. We do see a little bit of an improvement here. We've got 11.7 thousand. This is below the consensus of 18.1 thousand. So overall, I think that's still much better. We got claiming count change, which is less than what the market is expecting. And then we have the UK CPI numbers. So let's break down the UK CPI numbers because we do see a little bit of a surprise to the upside there, but it's not enough to kind of move the market. So we've got a little bit of an increase from 3.9% to 4%. Consensus was for a drop to 3.8%. I think the 0.1 percentage gain here, it's not that much of an impact into the market. We do see the sterling kind of rallied up a little bit, but it's not really sustainable, and we'll take a look at it from a technical perspective, what's really kind of holding back the sterling there. But that's pretty much the bulk data for last week. And then we have the UK retail sales number, which is not really great at all. We have the previous month's number revised up to 1.4%. We're looking at the December number, by the way. So November number was revised up to 1.4%. Market was expecting the December number to be negative 0.5. We actually got negative 3.2% coming out from the UK side of things. The US numbers, though, retail sales improve, and this is in line with what the market is expecting. It is much higher than what the market's consensus is, but again, we're talking about December here. It's kind of holiday seasons there, and retail sales typically in the US, we normally get an improved retail sales number for the month of December, so not really that much of a surprise. Unemployment rate in Australia, that remains flat at 3.9%. Weekly unemployment claims from the UK, also a little bit of an improvement, dropping down from 203,000 to 287,000. UOM, consumer sentiment, University of Michigan consumer sentiment also improved significantly. We got 78.8 on the index. That's a huge jump from 79.7. Market was expecting just a 0.1 jump. So we actually get something that's a lot higher than what the market is expecting. So overall, numbers from last week, it's a little bit of a mixed bag coming up from the UK side. It's not really strong enough to kind of propel the sterling any higher, and considering the retail sales number is kind of really limiting further progress there. Economic growth in the UK still definitely a concern, and the US numbers, we are looking at a lot of improvements here. We keep getting positive number over positive number coming up from the US, so I think overall that's a great thing. And considering that we are going to be looking at the GDP numbers from the US this week, we'll need to consider that as well. So alright, so let's start this week with the Bank of Japan. They're going to make their decision tomorrow. We're going to get that official statement. I don't think we are actually going to get that official statement coming out from the Bank of Japan. I think they're also going to keep ultra easy monetary policy for a little bit longer. Inflation numbers that we saw from Japan, it was a little bit weaker than what the market is expecting. So I think that gives enough reason for the Bank of Japan to not move away from negative interest rates. So it'll be very important to see what the decision is going to be for tomorrow, which is coming out from the Bank of Japan. I'll show you the technicals for the dollar Japanese and kind of give us a little bit of an indication to the current positioning on price there. All right, other than that, we are going to be looking at a full week of flash manufacturing PMIs and flash services PMI coming out from France, Germany, the UK, Eurozone, as well as the US. Let's take a look at the numbers here. In terms of the manufacturing numbers and services number, we are kind of expecting a little bit of an improvement overall from France, Germany, also from the UK. But if we take a look at the US number, I think what we're looking at the US number is kind of the opposite. We are expecting a little bit of a drop in manufacturing and services PMI. But again, look, considering how the US number has been a surprise to the upside, we should anticipate that kind of surprise as well for this week. And also we have the advanced GDP number, or the advanced quarterly GDP numbers coming out from the US. And take a look, I mean, this is for kind of the first quarter at the very least in terms of what we're looking at in 2024. So 4.9, expecting it to drop to 2%. That's a huge drop. That's a 2.9% drop. So, and considering how the US economic numbers has been, really positive, I wouldn't be too surprised if we actually get a higher number than 2%. Maybe we're looking at about the range of 4%. If we see that drop from 4.9 to 4%, it's not a significant drop at all. And the really big surprise would be that if the advanced GDP numbers comes in above 5%, that would really send the US dollars, kind of rocketing pretty much everywhere. And also this week we have the ECB rate decision. We're not expecting any changes from the ECB rate decision here, but we do expect comments coming out from the ECB in terms of how the inflation has picked up again in the Eurozone. Also the conflicts in the Middle East right now in terms of whether or not they're looking at that as potential impact into the higher energy prices as well. So that's what's in store for this week. And we also have the Bank of Canada as well in terms of making the interest rate decision. So if you're trading the Canadian dollar, feel free to look at that, but I don't think that's actually going to be a huge impact at all. Typically with Canadian interest rate decision, very similar to the RBNZ interest rate decision, the US kind of overshadows it, like the RBNZ, the RBA kind of overshadows it as well. All right, so that's pretty much what's in store from the fundamentals this week. Let's take a look at the technicals. So we are dealing with a lot of fair value gaps here. Let's take a look at the Aussie USD here. So we do have that bounce off the order block that we have been keeping an eye out for. That's pretty much about 65.50. We saw that bounce and we kind of broke through below the previous fair value gap, and I'm leaving it there really more as a comparison. We do have a new fair value gap. If you take a look at the size of that fair value gap and where it's placed, it is pretty much about the same fair value gap that we saw from December. So we have a new fair value gap at this point in time. If we take a look at the consequent enroachment or the CE, it kind of falls exactly at 66.25. So we anticipate 66.25 to be kind of a little bit of a stronger resistance. Beyond that, we're still going to be looking at a 66.50 where the fair value gap starts as well. So this is very unlikely to go anywhere. We are expecting a lot of stronger resistance at 66.25, 66.50, and considering where we are, we just bounced off the Ishimoku cloud. The rejection from the fair value gap, if it happens this week, it will take this back inside the Ishimoku cloud as well. Don't forget that we also still have that bullish order block at about kind of as support, pretty much at 65.50. So the best case scenario to look at the Aussie USD is to just wait for a stronger breakout. Either it breaks below the bullish order block, or is it going to break above the fair value gap that we have here and then place a position kind of in the direction of that breakout, because this is currently a trap within this kind of resistance and support. So it's really very hard to take a longer term position on the Aussie USD. Best case scenario, if you're trading within the range, that should be okay. I think that should be the way how we look at the Aussie USD this week. All right, next up is the Euro USD. Same thing. We are looking at a fair value gap, and if we take a look at where the fair value gap is, it kind of caps out at the 50% Fibonacci retracement. So pretty much at about 1.0925, 1.0930. That should kind of cap the Euro USD at this point in time. Support wise, obviously we have that support range at 1.0850, 1.09. So we're still looking at this fair value gap. Is it going to be strong enough to cap further correction in the Euro USD? If it's able to do so, then we expect further downside pressure to happen. We expect the Euro USD to be back at test 1.0850 again. Now for the pound USD, we still have that bullish order block up top, pretty much at 1.2750. We are dealing with a stronger key level right now at 1.27. And throughout last week, we did a midweek outlook and as well as the end of the week review. And I think the key level to watch out for the pound USD is that, can the pound USD exceed 1.2725? Because if it's unable to exceed 1.2725 and it keeps getting rejected at 1.2725, keeps coming back below 1.27, then we do know there's actually a selling pressure pretty much at around the current price level. And if that's going to be the case, we anticipate further drop to the downside for the pound USD. We're looking at a potential return towards 1.2625, where price has been bouncing off. There's actually a bullish order block pretty much at 1.2625, but I'm just going to highlight that level. Specifically, it's actually 1.2625. Now, should price move back below 1.2680, we anticipate further movement towards 1.2625 and potentially towards 1.26. and then further drop to the downside towards 1.2550, and that would still be the scenario for the pound USD, because considering that we're also measuring the momentum from the RSI has continuously been dropping down, so there are indications that there's actually a lot more selling rather than buying in the market, and that's kind of identified from the momentum that we have right now. So pound USD, again, we're dealing with a very important key level, which is 1.27. Any failure here at 1.27, we anticipate further sellings on the pound USD here. All right, lastly, we have the dollar Japanese yen. Let's talk about the dollar Japanese yen. Now, if you take a look at the chart here, the one on the left, there's actually a change of character up top on the left pretty much in the month of November. That change of character causes a huge drop in the dollar Japanese yen, a 10 yen drop, right? That's 1,000 pips. So we saw that drop happen pretty much all the way to December, and then slowly in the month of January, we are looking at the market kind of reversing itself. It has broken through the smaller chain, the smaller scale swing, I would say, the smaller fractals, which is the first change of character that happens pretty much at the start of the year. We have also kind of broken through the medium change of character level. We are right now transitioning above the Ichimoku cloud. So for the dollar Japanese yen, if the Bank of Japan doesn't announce anything about moving away from negative interest rates, we expect the dollar Japanese yen to rally to the upside. Today on Monday, we could potentially see price kind of pull back down a little bit towards 147.50, 147. If that's the case, then we anticipate more buyers to come in between 146 to 147. The other scenario is that price maintains a position above 148, and when tomorrow rolls in and the Bank of Japan doesn't announce anything hawkish, if they remain dovish, then we also expect a strong rally to the upside for the dollar Japanese yen. In terms of how strong that rally can be, we are currently looking at a potential for this one to go back up to 150 and potentially towards 151. Just from a technical standpoint, what we're looking at a potential trend reversal. We have also seen price transition back up above the Ichimoku cloud. So there's a lot to go for here on the dollar Japanese. I think the sentiment has pretty much turned bullish right now. I think the market is not expecting too much from the Bank of Japan. We expect the market to remain dovish, and if they do remain dovish tomorrow, I think the market will just take it in, and a lot of long-term position buyers are just going to come in and swoop the dollar Japanese yen. Considering where we are right now, I think the 146, 145 level is actually kind of the ideal, cheaper price to get in on the dollar Japanese yen. But again, if current pricing on Monday today, we didn't see that retracement, and tomorrow rolls in and price is above 148, I think doesn't matter where price is, I think buyers is still going to pick up the dollar Japanese yen. With that, good luck with your trades, and I'll see you soon.